Growth Equities Fund Manager at Gabelli Fund. John, perfect day to have you on. You don't operate on a day-to-day basis. I get it. But what do you say to clients that call you or email you or text you, whatever, and say, I'm scared right now?
Well, first, thank you for having me. It's nice to get away from the screen for a couple hours during
There's plenty here, by the way.
Yeah. But no, I think it's pretty clear. The Nasdaq, we're in the middle of a buyer's strike right now. And I think a lot of this is happening, no secret, in response to a lot of uncertainty in policy coming from the White House. I think the last couple days have reminded me a little bit of one of my favorite movies, Ferris Bueller's Day Off. The scene where Ben Stein is explaining the Smoot-Hawley Tariff Act.
Something economics.
That scene where he's like, did it work, class? Anyone? Did the tariffs work? No, they did not work. And the United States sank deeper into the Great Depression. And that's sort of the dynamic between, I think, Wall Street and the White House right now. And I think there's just been a buyer's strike. Wall Street's unwilling to add risk during this period of uncertainty.
So what do you think we can dip into politics if you want. What do you think the White House is doing?
Would rather not dip into politics, would rather stick to what I know.
But you have to operate in their world, John, right? And they say tariffs on China, and you're a major holder of Apple.
Right.
Apple's phones, this thing is made in China.
Right, and I think that there's so many dynamics to get into. I mean, U.S.-China being one dynamic, and I think that has implications for a lot of the big tech companies. But just kind of more broadly, I think the market's trying to figure out what is this administration's real objectives and real goals, and where is kind of the North Star that they're going towards.
You know, I'm not going to minimize what happened this week or the last couple of weeks. Anytime we have a big decline, 1% decline, I think, for 7 straight days, it's a scary time. I'm not minimizing that whatsoever. But I did post last night some stats from Charlie Bilello of Creative Planning that markets go down. That's right. That's the bad news, John. Markets go down on average, 25, 29 times a year, more than 1%. 5%, 10% drawdowns are not only normal, but they're kind of healthy, right? I mean,
absolutely.
I imagine as a fund manager, you want to buy lower and sell higher.
Absolutely. And I think coming into the year, sticking with the Nasdaq, we're coming off a 40% plus year in 2023, a 30% plus year in 2024. We were kind of priced for perfection. So obviously hindsight's always 20/20, but when you have that sort of a backdrop during an administration change, there's always going to be, some possibility of a correction, which we are now in the middle of in the Nasdaq.
Are you finding any better values then in European tech or any place else in the world?
Well, Europe has had a very sharp move in the other direction versus the U.S. But
it's outperforming the United States, almost every major market in Europe, by a lot in the last few months. Last few years, no.
Europe's definitely having a moment right now, and we do have a global growth fund with a good exposure to Europe. But I think going back to your question, are we finding any value? I think the most important thing for us is that, by and large, the fundamentals for most of these companies, I'll stick to large mega cap tech right now because that's what we open with, fundamentals remain pretty strong. These companies are coming off, by and large, really positive fourth quarter earnings reports, gave pretty optimistic views into first quarter into 2025. So I think so long as that is the case, these stocks will work over the long term.